Welcome to another stock market update. This is Sunday, October the 9th, after the market closed on the 7th of October. Just to catch up on the big picture, we look at it's a tale of two charts right now, which is a contradiction, which in itself isn't a good sign longer term. Here's the S&P 500, which is the sort of main benchmark index. But if I go to the NYA, which is like a combination of all stock markets in the United States, it's not such a happy picture. As you can see, we still haven't reached an all-time high in this what's called the composite index. Indeed, what backs that up is if I look at the stock market represented for the entire planet, which is this FAW here, the all-world index, and it pretty much mirrors what the NYA is saying, is that, look, there's no new highs here. The last time there was a new high was May 2015, a long time ago. So with these kind of moving averages here all over the place, and it's still not managed to get a new high, one could argue this is still very much just a big overblown artificial bear market rally. If you look at this chart of multi-year chart going back to 1998 here, which shows three different bull markets, you can see what a bull market looks like. It shows one new high after another until it starts going down again. One new high after another until it starts going down again. And so on. One new high after another until it starts going down again. And that's of the SPX. If I go to the New York Composite, which is all of them, you can see the same thing here. Only here, this isn't, new highs. This is a series of, lower action. And we've got this moving average here, which is the blue line, actually pointing down for this for that index anyway, which isn't a good sign. And again, here's what a bull market looks like, and now it's just this kind of all over the place. If I zoom in on the daily chart, this is just 6 months here, which gets a more of a close-up day-to-day thing here. This is still very much a market that's wandering around. Very hesitant, can't find conviction either on the upside or the downside. And that's what's reflected here in this sideways price action, which has really been carrying on since early summer. But if we just look at one thing which is important to take note of, is that this is the 50-day moving average here, this blue line. And this stock market does seem to be stuck below it, which is a negative. And you'll see that the 50-day is starting to sort of roll over a little bit as well. And I think this is very much a stock market now that's just it's purely going to be in election mode. If not now, then it is going to be in the next week or so, and that's just going to be bouncing around from one thing to the next, depending on which way it thinks who's going to win. It's going to see a Trump win as probably a short-term bearish thing because it's an unknown. And but if it starts to price in a Clinton win, then it might start edging upwards. But right now it's just completely lost. So and there's nothing in the event of no direction being given at all. There's nothing wrong with just waiting on the sidelines, which isn't a bad policy at all. I know it's frustrating, but this is one of those times when it really going to pay to just look to see what's going on in terms of market direction. Having said that, strong stocks in this environment should keep going up, weak stocks should keep going down, but there's no real, that concerted wind in your sails that you look for to either be bullish or bearish right now. But let's see how that changes. As it stands this week, though, I'm not liking how this market is not managing to break above the 50-day moving average. I'll speak to you next time.